Welcome to the Accountancy Learning AAT sample paper walkthroughs. In this video, I'll take you through the Level 3 Financial Accounting Sample Paper 1 Task 6. So let's get started. A business operates in an industry where standard credit terms on both sales and purchases are 30 days. Actual credit purchases during the year were 102,320. We can ignore VAT. Identify which one of the following is most likely to be the closing balance on the trade payables account. So for this, we're talking about most likely. So if we've got 30 days terms, we're expecting about a month to be the closing balance. So we've got the purchases, the actual purchases in the year, and we're going to divide that by 12. And so that is roughly a month's figure. Now, this is most likely, so you can see this figure doesn't appear in our list, but we'll just select the one that is closest. So that would be 8,726. The business had estimated the average trade receivables would be 16,800. However, you have just exported a year-end trial balance from the accounting software which totals 25,750. So we've got a discrepancy there. Identify which one of the following actions should be taken next. Do we check the accounting software for errors and investigate whether there has been any reason for an unusual balance? Do we report the figure that's produced by the software or report the figure that we've calculated because it looks more reasonable? So when we've got a discrepancy, we shouldn't just be reporting one of the figures. We need to make sure that we're looking into them to identify any errors or maybe a reason for an unusual balance. So it will be the first option. So now we're given some information about AJ's business. We're told that all sales and purchases are subject to VAT at 20%. We've got some daybook summaries, some trade receivables and payables summaries, and information about the bank as well. So the final part of this task is asking us now to prepare the payables ledger control account for the year ending the 30th of June X9. We need to show the purchases returns as the balancing figure. So we need to create this account from the information that we're given. So what is it we would put into the payables ledger control account? Well, first of all, we are going to start with a brought forward balance. That's going to be on the credit side. So remember, this is a liability account. So our balance brought forward will be on the credit side. Now, where do we get that figure from? So we've got balances here. We've got trade payables, and at the start of the year, it was 10,281. So that's our starting figure. Now, what's going to increase our balance is going to be the additional purchases that we make on credit. So to increase that liability, we'll have our purchases daybook. So we've got our daybook summary purchases, and it's going to be the total amount. So we can add that in there. Now, what else might appear in the payables ledger control account? Well, this is money that is owed to suppliers, so we're going to have paid some of it off. So we're going to have a bank transaction, and we can see here that we've paid 187,129 out of the bank to our suppliers. Now, we know that we're also going to have some purchase returns, but we don't know what that figure is. And then we're going to have our carried down balance, which we can find by looking at our end of year figure. So that is what would then be our opening balance on the next financial period. So that becomes our carried down balance. We can then now total it off, which you would have the totals already in your exam. And our balancing figure to balance it all off will be our purchases returns of 1,830, which you would then see that both of these match. And that completes task 6.